Good morning, everybody. Welcome to Friday, May the 16th, 2025. Today happens to be the third Friday of the month, which means it's options expiry day today. And it is going to be one hell of a barn burner. It'll be interesting to see how the markets open the first 2 hours and then from there what happens, because I am warning you, I am telling you, I am giving you the heads up that in some cases of the 3-point-something trillion dollars of options expiring today, trillion dollars, 3.5 trillion, upwards of 94% are call options in certain classifications. There's the index options, the stock options, there's various other levels. It's all on the bullish side, on the call side. And the speculation has been that in the last 10 days, we've had a run-up of these markets for a good week now, week and a bit. People are saying, oh, the bull market is back, and we're going to all-time highs again. It's all like fairy tale happy times. No, it's all artificial. It is all on the back of call option speculators who have been biased on the call side, which is typically normal. People buy low to sell high. They don't think the other way around. Option writers have been doing everything they can to take money from these people, 3.7 trillion of it, by writing options and saying, here, you want to speculate on this? Oh, sure, you can do this. Around these parts, this channel's neighborhood, my viewers are going, oh, you want to buy options from me? Oh, I'll write an option to you. Not a problem. I can do option writing when I do credit spreads. I write a call, I buy a call, or I write a put, I buy a put. I do condors, I do all kinds of these trades. I'm offering all kinds of liquidity to those crazed buyers out there who have this notion that stocks just always go up and never go down. And this glitch from April the 2nd, that was just a glitch. Independence Day or whatever that was, Liberation Day, whatever that was, it's over now. We're fine. There's nothing to see here. Here's the problem. Here's the thing. Okay, there's this one thing, just to kind of, bring it all home. This guy right here will help you. One thing, just one thing, that if call option activity is really biased, if there's massive interest in call option activity and not for put activity, that means the writers of contracts have to have the stock that they're writing options on, or they have to have another option to protect them, like credit spread writers, or the options could be written on other options like poor man covered calls. You're sitting on NVIDIA $100 or $80 deep in the money calls, and you're writing call options at 135, 140, 150. You have to have something against the call you're writing against. The specialists in the options pits, which don't exist anymore, there are no pits anymore, but in this options world, the specialists who have billions of dollars of capital to write and buy and trade contracts to keep an orderly flow going, especially in the Magnificent Seven, the SPYs, the triple Qs, there's a lot of capital there to back up option rights. And if there's a demand for calls, the option specialists will always make a market. They call it making a market. There's always liquidity for every second of the day, when sometimes there's a glitch between 20 sellers and 50 sellers and another 150 sellers. They're all 10, 15 cents apart from each other, while the market maker fills in the gaps and makes sure there's an orderly sale of contracts available to buy and to sell, and they're constantly moving. It's all done by computer. Used to be done by hand. Geniuses, these guys. Now it's done by computer with these fellows monitoring things. And there's a bunch of dollars behind these contracts to ensure that if anyone wants to exercise any of their calls that are in the money, there's stock to get. Not a problem. The reality is that if, 1 million shares of Apple are called tonight, exercised, 1 million shares of Apple are wanted by the holders of contracts, there's 1 million shares available, and it won't move the market any higher than it's already moved. The shares have already been acquired. These pros are already covered to cover the requirement to deliver paper. They've got futures and they've got hedges on those positions as well. They're not stupid. They are really smart people. So 1 million shares are available to be exercised, no problem. And those who delivered those 1 million shares, 250,000 of those shares are from actual people who just wrote options on their stock. They got a notification, I've been exercised on my stock. The remaining 750,000 are coming from the market makers. It's automatically transferred, and those guys have hedges on those 750,000 shares, and they have access to those shares through their own option writing. They are so slick, and they are all the way down the line, months and months and months at lower prices than the markets. And so Monday morning, there is no demand for any Apple stock from exercisers of options. There's no demand for Tesla. There's no demand for Google. There is no demand for Amazon or Facebook or any of the Magnificent Seven. There is no demand available for stock in the S&P 500, the NASDAQ 100, the Dow 30. The only demand for stock on Monday morning will be speculative people and investors who truly want to buy stock to invest in, either for an hour, half a day, a week, a month, or 10 years. Pension funds, hedge funds, and speculators. Not option writers. Option writers will not be moving the markets anywhere on Monday morning. They will speculate again, of course. They will buy and sell and trade contracts and all that stuff. But there is not going to be a pent-up demand for millions of shares of Apple at the market. Please, I need it. I'll pay anything for it. Don't even think that. And I'm not the only one who knows this. The ones who really know this, those folks who know what it is I'm talking about and are far more articulate, and if you had an opportunity to meet them in person, like you could share a beer with them on a Saturday afternoon at their house having a barbecue, they'll tell you all the nuances of this business, which I'm not qualified to give you that. They'll give you all the reasons why and what have you. But at the end of the day, in plain English, which is what I try to do for you, is tell you in plain English what the hell is going on. I have a feeling there are not going to be as many buyers as there have been to pick up stock, and that means call options will not be appreciating across the board starting first thing Monday morning. And as a matter of fact, we may find that we open with a little bit of a pop this morning, although it's not that great right now. It's 0.36 to 0.44 of a percentage point gains on the Dow, S&P, and NASDAQ. We're not up 2% this morning. We're not even up 0.5%. This could peter out in the first hour of the day. We may find that in the first hour, we had a little pop, and then we flattened right back to flatline. Dead cat bounce. And from here, the grind begins because the unwinding is happening. The great call option unwind happens today. $3.4, $3.7 trillion of expiring contracts have to be rolled out into June contracts, or July or August or wherever, but they got to do something. A ton of contracts today will die at 4 o'clock Eastern time. Any contract out of the money will die worthless. Any contract at the money will die worthless. They have no value. Any contract a penny in the money or more will be theoretically exercised over the weekend. And the question I have is, will the market drop 1 to 2% today by the time the bell shows up? And we find that, well, we thought there would be a whole bunch of contracts in the money. It turns out that a whole bunch aren't in the money. There still are winners all month long. After all, we didn't move up 1 or 2% this month. There's been some nice movements this month on stock, but boy, the highs were a couple of days ago. Maybe Tuesday, Wednesday was the time to take the best money off the table, because since then we haven't done a hell of a lot. Maybe that is the thinking. To triple Qs and the SPYs, they could be off 3-4% later today. Yeah, which of course puts a lot of contracts out of the money, but still leaves a bunch in the money. There's a win this month. Okay, this month was a win for call option gamblers overall. Right, a lot of which have already taken their money off the table. They flipped. Remember, day traders are in this morning and they're out later today. Some are overnighters only, 2 or 3 day traders, and they've flipped over. So there's been a lot of turnover, but we've had this constant I got in, I got out, I got in, I got out, I got in, I got out, I got in, and eventually someone's left in the store when the lights go off and they can't get the hell out of the store. Musical chairs tonight at 4 o'clock Eastern. I kind of wonder when the selling kicks in for the mass exodus, and the doors can only handle so many people at a time, and there's a crowd building up behind, and there will be casualties. For those of you in the option writing business, which means all of you, you are option writers here. You're sitting there going, well, what does this mean, Uncle Bruce? Should I be writing some credit spreads today to take advantage of a dip? I say you could be, but I will caution you, not first thing this morning. I'm going to tell you that you may want to wait excruciatingly for 3 hours to go by before you even think of doing this. Because what I want you to see evidence of on the indexes and all the trading that's going on, I want you to see solid evidence that there is a sell wave coming in as the day wears on. I don't want you to get caught where you write credit spreads, call credit spreads first thing this morning, thinking, well, I'll get the biggest bang for my dollar here. I can get a 10% return on my right, and all I have to do is fold my arms, and by the end of the night, I'm going to be a winner. And you find that, the market is backing off, but it's only down a 0.5 percentage point at the end of the night, and you actually aren't winning at all. Or there's news coming out from the White House, from Air Force One, as you know, who is flying back, with rumors of a major trade deal to be done between this country, and America on Monday morning announcement. You could have this artificial lift in the market of hope and optimism on a deal that's still going to work out, just like the China deal, that the tariffs used to be 2% and now they're 30% instead of 60 or 70%. Whoop-de freaking do, we're still going into a recession. Too late for you because you wrote too soon, or you wrote too optimistically, or too aggressively. You have got to be patient here to really get the direction of this market. I'm just saying, that's the market we're in. I can't give you a guaranteed trade today that says, oh yeah, by the end of the day we'll be lower. No question about it. I can't do that. Because remember, the folks that are surrounding the President of the United States, okay, and I'm not talking about the 5 or 6 people directly around him. I am talking about the 500 to 600 people around his people that are around him. These are all, remember, the first 5, 6 guys, they're all billionaires. They're all very valuable, very, very successful people. They're all the guys who are deep into Wall Street trading, and bankers and friends of bankers and friends of the brokers. These are the folks that have a vested interest in the market going up, because they believe that if the market goes up, that is a political indicator of how well the president is doing. And they say to the president, look at your policies, sir. Ever since you announced the Liberation Day stuff, we had that sell-off, as we warned you it would be. We've had the turnaround, and now America's golden age is upon us. And every announcement you make now is good news, because you are giving back something you stole from Americans. They're not saying it in that way. I am. They're saying, you put those 145% tariffs on China, and now you've reduced it dramatically to 30%. It's actually 10% tariffs on China with the 20% fentanyl surcharge. See, it's wonderful. You're just doing a great job, sir. The reality, though, is it's about 12 times higher than it was, or 5 times higher than it was when Biden left office. Tariffs between the U.S. and China are 500% higher now than they were under Joe Biden, sleepy Joe Biden. And so the market has taken a shit kicking, and is going to take a bigger one, because we're now into 16 days into the second month of the second quarter. We have 3 months every quarter. We've only got 6 weeks to go, and we're done with the second quarter. And the effect of tariffs are beginning to now show on the bottom line of corporations, including Walmart, that will not give you or me a forecast. They're not willing to tell us how they think they're doing for the rest of the year. They don't know. What they do know, it's bad. It's already bad. They're already telling us price hikes are coming in the next week already. We will see higher prices in Walmart starting next week, because even with only 30% tariffs to China and whatever other percentage tariffs to Vietnam, the Philippines, Indonesia, Malaysia, you name the country in Asia where stuff comes from, Japan, South Korea, you name any product from Europe, name any product from Canada, Mexico, South America, increased prices to Americans. It's not every single item in Walmart will go up in price, but certainly a large section, because the thinking was it was only going to be Chinese goods that would be the problem. If we could just get off of China, we'll be fine. So Walmart made deals with importers or exporters over there saying, look, guys, why don't you open up a distribution factory in Vietnam? We'll send the raw materials for those lawn chairs. We'll send the raw materials for the lawn chairs to Vietnam and then assemble them there and ship them from there. And that'll be Vietnamese imports, not Chinese imports. That didn't work because Trump's guys said, we're going to nail Vietnam too. And so Nike shoes are going up in cost, and all the other shoes made overseas and all the other clothing and product, and you name it, is going up, no matter where it's made. And so Americans are paying dearly at the retail counter. Starting this next week and 2 and 3 in a month, it's not going away. Do you think that every tariff instituted on April the 2nd will be eliminated in the next week and a half? You are in dreamland. You are in another planet. There's no way that's going to happen. The European Union of 27 countries are going, you made a deal with England, which still left England in a pickle, because it's not that great for those guys. Everyone says it's a great deal, but it isn't. We're not going to fall for that deal. We're not interested in that deal. We're equals. The European Union is saying, we have 450 million people over here. You have 350 million people over there. We have a bunch of G20 countries over here. You're just one G20 country. We don't have to deal with you alone for everything we buy and sell. We can deal with Canada, Mexico, each other. We can deal with the Asians. We can deal with the Mideast countries on our own without America's involvement. You guys are only 16% of our trade. 84% of what we do is elsewhere, and we can turn our attention there. And so we're not in a hurry to make a deal to save our European economy. It's the other way around. The Americans should be in a hurry to make a deal with the European Union to save its economy, because America is dependent on other countries for a lot of goods. But the Republicans aren't going to talk about that, and all of my detractors here aren't going to admit to that. It is what it is. Trade is trade. Markets are markets. Business is business. And I expect this market, the stock market, the Dow, the S&P 500, the NASDAQ, to be under pressure between now and the end of this quarter. And the reason is the companies will not be able to deliver the financial results that they thought they could deliver even 3 months ago. Certainly a year ago, nothing is the same. From a year ago to today, nothing is the same anymore for any corporate entity that is based out of the United States or listed on the United States markets. Everything has changed. The entire floor has shifted under their feet. And they don't know where it's shifting to even tomorrow, next week, next month, and next quarter. It doesn't look good is really what we're trying to say. And so I believe that the markets will be tentative, and we will start to see examples of cracks in the foundation where companies are not going to be able to deliver the results. And some will do very well, and some will do mediocre, and others will shockingly not deliver the home run. And this is where markets are in trouble. All-time bear market, all-time worst market of all time, Great Depression of 1930, no. But we're going to see something not good. We're Americans in the middle class. If you earn less than $100,000 a year household, it's going to be rough, because many of these folks are mortgage holders, rent payers that are just paycheck to paycheckers. 100 to 150,000 a year, less all the taxes you're paying and what have you, you're barely above your paycheck. And the problem here is 6,800 layoffs in Microsoft this week. 20,000 layoffs expected from Intel. We're not talking janitors being let go here. We're talking people. IBM talking about massive layoffs over there. We've got corporate layoffs being talked about everywhere. UPS, FedEx. It has been coming out for weeks and weeks and weeks. Layoffs, layoffs, and layoffs. The slowdown is already on in certain sectors, and it will permeate and infect other sectors. when you have 100,000 Americans getting let go that were making 100 to 200,000 a year or more, that adds up to a lot of tax money. That adds up to a lot of economic capacity that is being just taken out of the system. The steam is being let out of the economy. We're not talking about people on minimum wage that are being let go and can find another minimum wage job over here. We're talking about $220,000 people that can't find another job paying $220,000 a year. There are articles now in the papers about, are you overpaid? That's how they start the article. Are you an overpaid American? Is your future a downsizing where you're going to be let go and the only job you can find is 30% less in pay, 50% less in pay? It's not as easy as it was a year ago when the COVID thing ended and you could negotiate a better deal. We saw pay increases last year and the year before, quite handsome. We're not going to see that this time around. We're going to have people who are going to be just let go and not going to be given that 8% raise that they'd like to have. They're not even going to get a hired back at the same pay. This is a problem for the big picture. And American exports, which also drives the U.S. economy, are going to back off. The EU has put reciprocal tariffs on everything American. So a German company buying from an American company, they're looking at the same problem that American companies are looking at from goods from Europe. 30%, 40% higher in cost. German companies aren't stupid. They're going to go, well, why don't I just buy from a French company instead? We have 5 bidders for supplying us with goods and services. One from the UK, one from France, one from Italy, one from the USA. Which one do we take? Well, let's just do EU trading. Let's do that. The Middle East, they need to buy certain services. They can go to Europe, or they can go to the United States, or they can go to Asia. Where are we going to buy our stuff from? Well, Asia has no massive tariffs on us. The United Kingdom and Europe doesn't have massive tariffs on us, but the Americans do. And so when President Trump is here, we'll make a grand show and love him to death and shower him with wishes and all kinds of beautiful compliments. But on the side, we're going to make business deals where it makes sense to make business. Sorry, President Trump, but we can't afford to pay 50% more for your country's stuff versus Europe's stuff, because Europe is just as good as you guys are. And there you have it. It's nothing personal. It's not political. It's business. And that's what we're all about. You're here to make money as an option writer. You're not here to promote your president or your prime minister or your political party or your religion. You're here to make money. Welcome to the party, pal. Great to have you with us. Thank you again for, as always, hitting the thumbs up button for us. We have 114 people who've answered my question of the day, and I'm really curious today just where we're at on this question, because today's question is an indicator of where things are going with this channel. This channel, as I have repeated millions of times, is dominated by people who are option writers, not option gamblers in the open market, but stock option writers, equity stock option writers. And more of you are looking at equity option income premiums from writing options as a method to increase your returns in your retirement accounts, your RRSPs in Canada, your Roth IRAs in the US, or your 401ks, whatever retirement plan you can control and you can write options in. And then many of you have got cash accounts, margin accounts, and you are using income from these accounts to supplement the income you have at work. You've decided or discovered that by writing contracts in margin accounts or doing credit spreads, you have added side gig money to your family. And at first, it was a nice little, oh, it's 500 here, it's a couple of $1,000 there. It allowed you just to kind of build a bit of capital up. For some of you, you started to take 1,000 out of the account here, a couple of thousand out there once in a while, and it helped with unexpected expenses around the house rather than just put it on a credit card and deal with it later. And now, for many more of you, it has become a dominant feature of your income. You are now realizing that if you add up how much option premium you're bringing in on a 3-month basis, a 6-month basis, an annual basis, you're doing your mathematics and going, Uncle Bruce, I used to bring in every 3 months about $2,000-$3,000 for my retirement accounts. Now that number is more like $6,000, $7,000, $8,000 every 3 months. I divide that by 3 and bring it down to a 1-month number. Add it with that, all of what I'm doing outside of my retirement accounts bring that down to a monthly basis. I put those two together and I go, holy crap, I'm bringing in more money to my investment portfolio overall than I make at work. Or it's quickly approaching it, or it's at half my salary. Half my salary now is being added on to by option premiums. And I've only been writing options for 6 months or 8 months or a year and a half or 2 years or 3 years. Uncle Bruce, I'm making double my income. I'm making triple. I'm making quadruple. I long ago quit my day job, but the last time I got paid at my job, I made this much money a year, and now I am making this much money a year writing options. It isn't even comparable anymore. I'm asking you today to answer the question of the day. My income from writing options now beats my salary. And when I ask you that, I'm talking about you have a salary or you used to have a salary. Where are you at with all of your premiums coming in combined? Can you annualize it? Have you noticed in the last 3 months, 6 months, 9 months, a year, an absolute profound shift in the amount of capital that you've been bringing in? And it has completely shocked the hell out of you because you thought, well, I thought I was doing about half my salary was coming in. But in the last 90 days, I've gone cash secured puts, I'm going credit spreads, I'm doing deep in the money calls, I'm doing all kinds of stuff with poor my cover calls and regular calls. No, Bruce, I'm bringing in 125% of my salary now in option premium. This has been a profound shift here. Can you tell me this by answering this question? 123 of you have come in with an answer, and 22% of you are saying, you know what, Bruce? I make more money writing options than I make at my job. 78% saying not yet, but that number is shifting because if I asked this question, when I would have asked you this question a year ago, it would have been 10% to 90%. 90% of you said no, not yet, but 10% would have said yes. It's now 22% and climbing. And I think it's going to get to the 50-50 point. Now, to be fair, some of you have only been here for a month or 2 or 3. You've only just started being option writers. How could you possibly be making more money already writing options versus what you make? You're still getting the hang of it. You're learning it. You're getting better at it. You're getting more comfortable, and so you're putting more capital to work on it as you get more comfortable with it. I understand that. But for those of you who've been here 3 years, 4 years, 3 years, 2 years, some of you out there are shocked to learn that within a year, year and a half, you can make more money doing option writing than you can make at your job. And then it becomes so unbelievable that you go, Uncle Bruce, I am making double on option premium than I can make at work. And I know for a fact, I will never make double this money, adjusted for inflation, ever in the career I have. I was making $100,000 a year in this job. There's no way they're ever going to pay me $200,000 a year to come into that company. There's no way. I'd have to be the senior vice president in charge of 1,500 employees. It's not going to happen. Not in 10 years. That's not going to happen. Because there's 1,500 people in front of me that are going to get that job before I get that job. No, I am going to go from 100 to 105,000, eventually to 110. I might get a bump in pay and a promotion. I'll get to 120, but I'm not going to get to 200,000. Option premiums? Good Lord, Bruce, I'm bringing in 200,000 a year in option revenues already. And that is not topped out. It's going to continue to grow. And that's what I'm getting at here. This poll question, as I ask you this question every 3 months, you guys are going to notice how many more, on a percentage basis, people here generate more than they make it work from option premium, because you're becoming better at it. And that's as simple as that. Doesn't matter who the president is. Doesn't matter who runs the Congress. It doesn't matter who runs the Senate. Doesn't matter who the Prime Minister of Canada is, who's the Prime Minister of England, who's the Chancellor of Germany. We don't care. We don't have to care. You're option writers. Option writers are always option writers in any market, no matter who runs what. And 22% of you are saying, I am making more money than my salary writing options. That's 1 in 5, better than 1 in 5. It's approaching 1 in 4. This is huge. Absolutely massive. I really encourage you, if you please could, answer this question today. Tell me, what do you think? How are you doing on your option writing? Thank you again so very, very much. I got Mr. Wonderful on my screen right now. I just refreshed my page to notice I have 80 thumbs ups. I got Mr. Wonderful telling me, oh, I want to sell you something. Wow, thank you, Mr. Wonderful. Appreciate that. He's got cameras all over the place. He's got a suit on, and he's done. Wow, that's awesome. Thank you, Mr. Wonderful, for advertising on my channel. I don't think he knows he's advertising on my channel, but somewhere the demographics told the people at Mr. Wonderful, you want to run an ad on Uncle Bruce's channel because his people are the ones you want. Yeah, well, no kidding. My viewers are successful market investors. And yeah, who doesn't want to get a hold of you guys? Everybody wants to talk to you guys. 22% to 78% is the ratio now for making more money than my salary. 80 thumbs ups have come in. Thank you all so very much. Appreciate you all being with me this morning. Francis Lee is here. Good morning from the middle of Tennessee. Richard Carlin is here. Eddie Martin, Andrea is here. Keith, Just the Truth, is in the house. The man is here. Producer price index down 0.5%. The Big E is here. Robert Malhout, as always, is in the house. Good morning to you. I'll pass on your greetings to Jen. Rice Checks, Lucky 13 today. Stock Jockey, welcome to the party, pal. Dude, good morning. Also from the middle of Tennessee. Lee Mortimer, hey, everybody, good morning. ALA is here. Legacy 713 is in the house. DH is here. Mark is here. Double D. And at number 20, I'll drop email during the show. Thank you, Uncle Bruce. I'm still here. It's just a time thing. We will be talking, whether it's a phone call or whatever. We will. It's going to happen, man. We've been trying to do a one-on-one here, and I fouled it up twice. It's unbelievable. It's just ridiculous. Thank you, buddy. We'll get together. Charlie, good morning, everybody. Deep Value. Hello, Aaron here. James of the Mystery Tree. Henry T. Hello, happy Friday, everybody. Margin called. He bought bought my cash secured puts back. Stock Jockey. JJ is in the house. Bobby Atkinson, TL, Jeff Presley, Corinne, Jeff Presley. The tax bill and deregulation will be the ignition for growth. There's hopeful people out there. Dude, we're essentially in a perpetual recession. That's the debt-based system. Politics aside, says dude. The man, yep, the debt-based system is dumb, hence the bring in revenue and cut costs. Jeff, dude, with respect, if that were the case, we would have been in a 10-year recession starting in 2015. Bruce B, Tiger Man, laughing out loud. Dude, it's just been held up by asset purchases and money printing. It's a slow grind. Jeff, agree, the money printing for sure. Dude, it's all in the US dollar depreciation. Now, Chase, Rosita Parker, I'm number 67 on that thumbs up meter. Thank you so much. Home prices, stock prices, commodities, all have gone up since 15 over their market value because of this imbalance. Bobby, if SoFi can kindly go to $20 or more, all of my Jan 26 cash secured puts would be worthless. The premiums collected is on par with my yearly income from my employer. So yeah, this would be like huge. I have a suspicion that everyone who watches me here on a regular basis and who have become option writers, especially cash secured put writers on SoFi, at $20 a share, every single one of you will, of course, be up on your accounts because of the sheer magnitude of SoFi's move to $20. Like Bobby, many of you will have found that the gain you've made on your cash secured put positions just in the last 6 months, going to $20 a share, say in a month or two from now, you will have way exceeded your annual revenues coming in. But for some of you here, a pretty good chunk of you, some of you are going to become millionaires. Some of you are going to certainly become mega 100,000aires. You're going to have taken accounts that were a year or two ago worth $50,000 to $150,000 at that time, and they'll have grown up to the point where, with cash secured put premiums, you're going to be sitting on $400,000 to $800,000. I am pretty convinced of that. But some of you are definitely going to be in the millionaire category and beyond. And it will not stop, because SoFi isn't just going to go to 20 and then back to $8 a share and then get delisted. That's not the future of this corporation. And this corporation is going to be part of the S&P 500. This corporation is going to be picked up by every institutional investor. Every pension fund is going to buy this thing. Anyone investing in banking ETFs, they're all going to buy SoFi stock. The stock is then on its way to 30, 35, which will then absolutely make a higher number of you millionaires. Those of you who will be in that 500,000-600,000 range will be over $1 million in value. $1.5 million to $2 million. Those of you getting to $1.5 million, $2 million will be now worth $4 to $5 million. It's nothing personal. It's just numbers. That's what's going to happen here. People who are sitting on $30,000, $40,000, $60,000, $80,000 accounts are going to be sitting on $250,000 accounts. I'm sorry if I'm shocking you, but that's just the way it is. A stock going from 13 a share to 35 in the next year, year and a half is going to make some folks around here incredibly successful. And it's going to change your trajectory. It's going to change your game plan. It's going to change your perspective. It's going to make you reassess your lives, because you're going to quickly go, my number one asset is my brokerage account. My number two asset is my house. My house is worth this much with equity. My account is worth this much with equity, and it's not even close anymore. And then we have cars, and we have furniture, and we have life insurance policies, and we have retirement plans at work, and that your entire wealth structure will be completely altered and will be lifted dramatically. That's if you hang around here. That's what I think. Just my opinion. I don't care who the president of the United States is. Bobby, give me another 2 to 4 years like that. I'm out, baby. No, you're not. You'll be around forever. Hector, number 69. Good morning. Katie, number 75 on the thumbs up meter. CKT 7601. Bobby, I'm hoping the same thing. $20 on SoFi is a magic number, but it's not the end all and be all. Bruce, View, I want in on this. I like this game. Richard, within the next year or so, my option writing income will equal or surpass my day job. I'm certain of that, says Richard. Dak, good morning, Uncle B. Doug, my friend, the greed and fear index is at 70, near extreme fear at the moment. There you go. Interesting. Welcome all to the program. Thank you for joining us this morning. Mark Downs, thank you. Bobby Atkinson, out of the rat race. That's what you will definitely be out of. Yes, you'll be in a different world. Many of you will be to the point where you used to really worry about prices at the grocery store, at any retail outlet you would go to. You would worry about a $10 increase in the cost of an airplane ticket to somewhere else, or you would freak out if Disney announced a 2% hike in their park pass costs. You're not going to sweat this. You're not going to sweat the small stuff anymore once the SoFi does what it's going to do. You'll still pay attention to it, but it's not as dominant in your life anymore. You're going to start looking now at a different objective. One, capital preservation. Number two, growth, income growth. And number three, the family structure. You're going to now look and go, okay, I'm the head of the family. My wife and I, are the elders now. We got kids, hopefully grandkids. We've got to look now at a succession plan from here, because we have something to talk about with respect to a succession plan. We have equity in a house. We have equity in our account. We have equity here. We're growing wealth. Now it's time to talk about and think about and wonder about the next generation going forward. What are we leaving behind? Because again, time is time. Just saying. But in the meantime, and between now and whenever, you're going to enjoy a much more interesting lifestyle than you've been used to. It just happens. It just works out that way. You might go to a furniture store. You might go to Lazy Boy. You might go to, XYZ furniture company and buy a sectional That was unthinkable 5 years ago. A sectional couch in your rec room, living room, that is so expensive that you would never have thought of this as a possibility. And today or tomorrow, you're going to look at that and go, that would be really nice to have with all those features. And you're going to buy it. Cash. It's a different world. You just stick around a while and enjoy the party. Mark, thank you. And welcome to the program this morning. All of you who are here, it is much appreciated. We're opening in 19 minutes. And I'm kind of curious, how many of you are going to be doing a trip this summer? Are any of you plotting a holiday trip this summer, say from anywhere in June, July, August, September, that you wouldn't have done without the amount of money you've made from contracts, from option writing? Will the gamblers out there, have the gamblers out there allowed you to book a trip that you're definitely taking this year that you wouldn't have taken in past years because of how much capital you've made off of them? I would love to know. Please fill us in if you want. Love to hear about that. Hey, Jared, good morning from sunny Cincinnati. Team Casino. Mandu 5, number 97, good morning on the thumbs up meter here. Let's get to 200 thumbs ups for Bruce. Bruce View, BV, I'm a newbie. I sold puts on SMCI just to take a dip. But I learned to hope to make this a full-time job soon. Laughing out loud. Bruce, welcome to the party, pal. Great name, by the way. Become a member ASAP. You want to go Gold Bagel because you'll join me every day at 8 o'clock instead of 8:30. And you'll join me Wednesday nights, primetime live at 7 o'clock, just for Gold Bagel members. We talk stock options, strategies and ideas and compare notes and you name it. The more info you can get, the better. Become a Gold Bagel member. Send me an email and say, Uncle Bruce, I joined your channel as a Gold Bagel member. Here's my handle. I want in on the Discord group. I want to be a fly in the wall in that Discord chat group that you guys have for Gold Bagel members only. All kinds of opportunities to join this family, sir. Congratulations and keep up the good work. Check the classes out on my website. Charlie C2, I wrote the triple Q10 of the at 521, 523. Those are call spreads yesterday. And I got nervous when it hit 520, but I bought back at a $320 loss. I wrote puts 10 at 515, 513. They paid me 10 cents. They died worthless. I ended the day with a $220 loss. So instead of losing 320, I lost 220, and I got it done. Now, your contracts at 21.23 may have been written too low, but you may have gotten greedy for trying a big pull. I don't know. Or you wrote way too soon in the day, and you didn't wait long enough, and the market caught you. This is why I want all of you out there to hold up. Don't be in a hurry to create a credit spread for tonight's expiry in the first 2 hours of our day. You don't want to be doing that. You need this market to show you truly what the hell is going on. Sometimes they open up really robustly, and then they lose it all in 3 hours, and then they kind of flatline for a while, and now you can pick your target above or below this market with relative safety. When Charlie wrote those puts at 5:15, 13, he knew he was going to make that money. He knew, oh, I'm going to make that. That dime is mine. That dime is mine. Yes, but that 21, 23 may have been written a bit too soon with an exuberant market catching and scaring him off, which, okay, it's all right to pull it, to say, okay, I got hit on this one. I'm going to pull back, but I'm going to write those puts instead. And I'll minimize the loss. Don't worry, I'll be back at it again tomorrow. It's all good. John T., I've got call credit spreads on Qs, 510, 515. I had to roll out on those. The Qs, let me just double check last night. Where are we at right now? 519.25 last night. Right at the moment in the pre-market, these Qs are sitting at 520.34. Okay. Yeah, 520 or so. Let me get back to my comment here. Had to roll out. I'm hoping that will be profitable next week. I collected $1,340 on 10 contracts by rolling out to June 27th. We shall see. Well, if this indicated market, excuse me, each Qs slip off to the 515, 510 level Monday or Tuesday, between now and then, you're already going to see a tremendous return come your direction. You don't have to wait until the very, very end of next week. You might be out of this position in the next 3-4 trading days, and you'll be very happy with your return. Again, rolling is never a bad idea. Ron Dugan, NVIDIA, 124.26 call credit spread. I'm still cooked on this. Where are we at on NVIDIA? We are at 134.83 as of last night. And as of right now, NVIDIA is sitting at 136, so we're up $1.50. But can NVIDIA today lose $8 a share in one day? Yeah. Will it lose enough to fix Ron? I don't know. But will Ron roll forward? Maybe, Ron, it's up to you to kind of make this work. Charlie, if I had just folded my arms and waited, I would have been a winning trade by the end of the day yesterday. Second time in 14 trading days, I have lost on the trade. Both times on call spreads. Interesting comment. John Biscuit, which is the cooler name, Bruce or Donald? Your local library. Hey, Uncle Bruce, I'm making $5,000 a day. I'm making 5,000 a trading day on zero expiry contracts on SPX credit spreads. Should I prepay my taxes or just wait till the new season? Any thoughts? I don't know. I don't know where you are. Canada, the USA, what state? I don't know in what structure you're trading in. Are you trading in your personal name? Are you trading in a corporation? Are you thinking maybe to create an S Corp or some kind of a corporation to do all your trading in so that you have corporate write-offs against your gross income? Is this capital gain or is this considered income? I have no idea of any of this stuff, and it's none of my business, and it's not my specialty. You have got the experts to talk to now. You need to talk to a tax expert. You need to talk to an accountant, a tax accountant who is familiar with, your locale, state or otherwise, province, country, and go from there. At the end of the day, though, if you can make 5,000 a day times 20 trading days a month, it's 100,000 a month. You can easily afford the kind of advice you need to make sure you maximize your take-home dollars. And don't stop making money. Keep it going. John Biscuit, in an alternative universe, we could have Robert the Donald and Bruce the Duck. How about that? BP, the problem is you don't get decent premiums on triple Qs unless you go very close to the money, like less than $10 from the current price, and then the Qs are so volatile that they're catching us out because we cannot roll or get decent put premium to offset on the 0 day to expiry deal. Well, maybe you should be going to SPY. Maybe you should be writing call credit spreads on the S&P 500 rather than on the NASDAQ 100 because it is the most volatile of the indexes. And maybe you're just not fast enough or able to be quick enough to make the moves you need to make. Again, you're going to find out what works for you and what doesn't. If the Qs don't work for you because you love the premiums, but you're too close to the fire, you're not going to be a happy camper. Face it. That's just the way it is. On the other hand, BP, maybe a 0 day to expiry just isn't for you. Maybe it's 1 week to expiry. Maybe on a Tuesday, you write for next Tuesday expiry. Or on a Tuesday, you write for Friday expiry, not Tuesday expiry. Maybe that's the way you have to play it. And then you can go further out. If you go 3, 4, 5, 6, 7, 8, 10 days out, you can go many dollars further out on the spread from the campfire. But if you're unwilling to consider that, or you just don't feel the returns are what you want, then this isn't for you. It's nothing personal, It's just business, and sometimes the business doesn't add up for your needs. You got to just figure out for yourself what it is you want to do here. Welcome all to the show, everybody. Thank you for popping in here today. We open up for trading in 10 minutes? We're up 102 on the Dow. We seem to have topped out a bit here. Kind of wondering if we're going to give up ground even before we open. I'm wondering about that. Thank you all for being subscribers to this channel at the very least. Please, if you're brand new, join me as a subscriber so that you get alerts from YouTube every time I put up any content. But if you really want to be in on this market and in on this family to really be on top of this market, become a member of this channel, whether you're a chillin' member where you can make commentary during my trading time, or a gold level bagel level member where you will receive 6 additional programs a week rather than the standard 5. You're getting 11 programs a week, which is 44 minimum a month, depending on a 20-day open position every month. We're just trying to help you make money in this market. It's nothing personal. I just want to try to help you guys get richer if it's at all possible. Thanks again for those of you who have taken the time today to find the thumbs up button for me and hit that sucker. 103 now have come in. I appreciate this so much. 9 minutes until we open. Also, those of you who've been answering the poll question of the day, 166 now have answered this question. So out of 166 people, I'm asking you guys, or I'm having you comment on this statement. My income from writing options now beats my annual salary. Have you figured this out between your cash accounts, your margin accounts, your TFSAs, your RRSPs, your 401ks, your IRAs, all these accounts you've got? Have you done the math? And have you figured out in the last 2 months, 3 months, 6 months, how much capital you've brought in on option premium, divided it out by to a monthly amount, and then just multiply that by 12? Does that equal or beat your take-home pay? That's what I want to know. Now, out of 166 people, about 33 of you are saying, yes, I am making more money writing options than I have been making at work. Now, of those 33 people, it is entirely possible that 20 of them don't even work anymore. They're now using what they used to get paid. Yes, Bruce, I quit my day job. I got laid off. They paid me out 3 months' salary, gave me 6 months' health care. All the shares that I had earned in the company are now vested to me. And immediately I started writing options on the stock that I'm sitting on in my retirement account. And I immediately brought in $5,000 in the first month just on these options that I wrote on the stock I own. In the meantime, what I've done is I've reorganized my financial affairs, and I am now writing contracts on a home line of equity that I've taken out, or I sold a third vehicle for $25,000, got rid of that, and I've put that money into the market. I'm rearranging my affairs. Other assets I've held for years and years, gold bars that I've had, silver bars, I've just cashed them all in, and I'm now using this capital to write options on cash secured puts and credit spreads, and I am generating more money per month now than when I used to work for a living. That could be happening. 21% of you now say that is what I'm doing. That now looks like at 168 people, about 37 of you now are saying I make more money than I used to make at work. 79% of you are saying, nope, not yet, but you're probably working on it. And I have a suspicion that a whole bunch of those 79%ers are halfway there now. They're already halfway to work, where a year ago they were at 10 to 15% of their pay. Now they're approaching half or beyond. And they know that in 2, 3, 4 months from now, yeah, the way this is growing and the more confident I'm getting as an option writer, I will be generating more money than I make at work. And yet I'm still working. I will not quit the job as long as possible. I want to hang on to my job for as long as I can, because I want that paycheck capital and I want this capital that I'm making on the side to be compounded. I don't want to touch my account. I don't want to take any money out of my margin account. I want to grow and compound the revenue in my margin account so that I get to the point where I'm generating $400 or $500 or $600 every day in option expiry, 0 day to week option expiries. I'm bringing in 8, 10, 12,000 a month from that account. And then I can consider working now part-time for somebody else, working part-time out of my home, or completely quitting all work and only being a full-time asset manager of my affairs. Congratulations, everybody, on whatever level of success you have. Having 21% of you say, I am making more than I generate, that's a phenomenal number. That is an absolutely phenomenal number. I say congratulations. Well done. 1 in 5. Are you kidding me? If we can get that to 1 in 3, if I get you to 33%, oh my God. A third of my viewers are making more money writing options than they are at work. Holy crap, that's massive. I am convinced many of you who watch me and have been watching me for quite some time, and you're still working, that many of you out there are sitting around your office during the day, or you're going for a coffee break, or you're heading for the bathroom and you're walking through the office, or you're being asked to go to a different department to pick up some files. You're passing cubicle after cubicle, department after department, and you're looking around at the corporation you're part of, and you are seeing hundreds of people, hundreds and hundreds of people, and you know deep down inside, none of them write options. Not one of them writes stock options. They all put their money into some kind of a managed portfolio run by BlackRock or Apollo or Vanguard or Invesco, any of these, mutual fund operators, ETF operators. You know that all around you, not at work, not just at work, but your family and all your friends and associates that you've known over the years, former workers, you worked at that company 10 years ago, you worked at that company 20 years ago. All those guys are still there, and all of these folks have just been putting in $500 a month, $300 a month, $800 a month, $1,000 a month into professional money managed portfolios, and they're getting crap returns on their money. And they're going to have to keep doing it for 20 more years because they got to build this capital. $1,000 a month is $12,000 a year, and 10 years is $120,000. 20 years is $240,000 of fresh capital going into these accounts that hopefully will compound so they can retire when they are 65 years old, and you are 45 years old. And in the last 3 years, you've started generating 50% returns, 80% returns in your retirement accounts. And you are blowing away how much money you're putting in. You're making more money with your account than you're putting into your account. That's number one. Number two, your account has grown exponentially in the last 2-3 years to the point where you realize that if you had stayed the way you were, it would have taken 10 years to get your account to where it is now. In 3 years, you've done 10 years of gains. And you're sitting here going, I'm 43. When I'm 46, in 3 years from now, that account that I now have a 56-year-old account over there. That is going to be a 70-year-old account. That account is going to be worth way more than I would have ever been able to get it to. At $1,000 a month into the account, 500 is yours, 500 is your employer. If you've got a deal that good, and not many have that. Even with that, putting in money, $1,000 a month for the next 15, 20 years, your account wasn't going to be worth what it's going to be worth in the next 3 by you managing it yourself. Because you now know that. You now see this. You go, oh my God, every time I write contracts, I bring in $15,000 in cash. Every 2-3 months, I have to write new calls on all these stocks I've got. I'm bringing in all this dough. And I buy more stock and I write more contracts. I mean, it's just compounding and compounding inside these retirement accounts, tax-free. And there's a pot of money waiting for me at the end of it. And at the end of my work career, which may be in 5 years, because I'm not going to be working until I'm 65. What am I, nuts? I might start taking money out of this account when I'm 59 and a half, whatever the rule is in America. The Canadian rules are different. UK rules are different, whatever. When you start taking money out of that account, it's worth millions of dollars. You will not be able to drain it. You will not be able to drain the account of money because it's made so much capital and is still generating revenue at that point in time. You know and I know what's going to happen. That money in there is going to go to your heirs, a big bunch of it. The capital outside those accounts, the margin account money you're managing, is compounding as well and will get you out of that day job. You will fund your way out, and it continues to grow even though you're taking money out every month. You'll take out your 5, 6, 7, 8,000 a month and you're piling 20 into it. It grows despite how much you take out of it until you reach 59, 60, and then you decide, well, do I take money out of here, money out of here? You're going to have tax problems. Delicious, gorgeous, wonderful tax problems. Oh, are you guys going to be bitching? Oh, the moaning and groaning about how much you have to pay in taxes. Oh, it's going to be terrible. Some of you are going to need to delay the purchase of your Bentley by a month or two just to kind of get over the tax bill, and then I'll get the Bentley. Oh, you poor people. I feel so bad for you guys. Welcome to the party, pals. I'm glad to have you here. I really am. Dude, hey, try 0 day to expiry and close in the morning. I do this and only write midweek. I avoid Friday because of the volatility. Dude, SPX is interesting as an alternative to the Qs. It might be more liquid than the Qs for our kind of spreads. BP, yes, Uncle Bruce, I have not been able to get any 0 day to expiries to work 1 day or 1 week out. I suppose it's just a very volatile time. Like you say, I learned this is not for me. I'll stick to the wheel. It's all good, BP. I just want you making money any way it works for you, honestly. Henry T, my cash secured put Rocket Lab $21 contract, 718 last week. I'm 25% in the radar here. Henry T, gaining, baby. We're open, by the way. Double D, Uncle Bruce, I'm close, but I need a bit more time. I'm thinking of focus instead of a full-time job, but I'm getting there, baby. I'm getting there. John T, I have a small Roth IRA that is not too small anymore. I would love to get that to the high 6 figures and have plenty of tax-free income in retirement. Could not have done this without you, Uncle B. Thank you all for filling us in how you are doing out there. I know some of you have had phenomenal years. The last 6 months have been phenomenal, and I'm encouraging you to keep it going. J-Boy, I'm still working, but I work from home, and I enjoy my job as it allows me time to manage my investing. It's a win-win. I will retire early, though, and there you go. That's your ultimate situation. ALA, the bells, baby. I'm ringing the bells today. Our buddy Larry Titus is in France on gambler money, I suppose. Here, Touchgrass, let's rock. D8, neat. Richard, neat. Splair, Heidi Ho, and good morning. Question for you guys, apart from the poll question today, are any of you planning a summer holiday this year because of the gamblers? Are any of you being funded with a holiday this summer because of the gamblers that have given you the dough from all the option writing you've been doing? Where are you going and for how long? Is it because of the gamblers? I sure hope it is. I'd love to hear. Are you planning a trip later this year? Have you plotted a trip for this fall or this winter coming up that is funded from the gamblers that have been allowing you to make money in this market? I would love to hear any of those. Splair, J-Boy, that's the dream, having a home office, baby. That is the dream. We are open and we are trading. Let's find out what this market has in store for us today and find out where we are doing now in this market. Welcome one and all to the program. Thank you for joining us. Let's see what's going on. The triple Qs are up 56 cents, but only up 56 cents. Interestingly, the Nasdaq is up 38 points, but the Dow is down 78. We're not gaining here. We were up 0.4% this morning, something like that. We're down 0.19 right now on the Dow, down 78. The Nasdaq only up 0.19, and the S&P is almost flat. What is going to happen today? Let's find out. Thank you all. Mike H., they funded my new in-ground pool that's being installed as we speak. The gamblers have funded the building of my swimming pool. Hey, guys, look, you don't want to tell me about your trip? Tell me about what around your house is being funded by the gamblers. What in your life is being funded by the gamblers? Bobby already did this year's trip, waiting on planning next year's trip in case this homeless guy set up a cruise somewhere. If you're doing a cruise, Uncle B, we'll catch up with you on a cruise ship, but we'll keep you posted. Welcome all to the program. Thank you. Splair, I am planning already at the end of next month to go to Eastern Europe in order to visit 1 or 2 places from my favorite game, but it's halfway at least founded through the PI network coin and 30% from covered calls. There you go. Way to go, Splair. Making money already and starting to enjoy life. I love this. Keep up the good work, you kids. 77-point dip on the Dow, approximately. We're up 5 on SP. We're up 50 on NASDAQ. We'll see how this works as the morning grinds on. Will this market go into the red after an hour or two of our opening here? And do we grind lower as all these calls have to be rolled out? There's a huge bias to the call side that now has to be closed off and shut down. And I wonder if there will be pressure on these stocks. Monday, Tuesday next week, I have no idea. Are we going, 3% lower right away to start the week off, right into Monday, Tuesday, Wednesday? I'll be here. Will you be here? We'll see what's going on. The market wants to go up, you'll make money. The market wants to go down, you will make money. The market doesn't do anything, you will make money. Welcome to the option writing channel, where people write options for cash. We don't gamble. We're the casinos. We create the options. We're the ones who create the options that the gamblers play with. It's unbelievable. It's so easy. Giddy up, everybody. John T., I took my wife and my son, his wife, and my grandson to Disneyland. Stayed at the Disneyland Hotel. Cost me around $3,000. Many memories I will always cherish. And photos taken and videos taken, I am sure. Awesome. Splair, it's a mix, enjoying life and working on YouTube while we enjoy it somewhere else. Normally, I could go 2 weeks into my hometown in Poland, but I do 10, 11 days, for clicks. It's all good. At least I can relax on the train rides. There you go, buddy. Splair will be to the point down the road where he won't work for anybody else but himself. He'll do his YouTube channels, he'll do his trading, and he'll grow both. And Splair will be a self-employed entrepreneur for the rest of his life. Giddy on up, everybody. Welcome to the party, pals. Have we come a long way for some of you around here? No kidding, Sherlock. Have your accounts shifted in the last year or 2 or 3? Yeah, there's been some wins around here. And I congratulate all of you who are scoring. A couple of things that I noticed this morning that I'll mention right now. Tariffs are now 5 times higher than they were before Trump got inaugurated. There's a lot of bond action going on and has been going on ever since the inauguration or the Liberation Day thing on April the 2nd. The bond market freaked out when the April 2nd day came and went. And we have not had a recovery in the US dollar since. The US dollar has taken a hit against major currencies around the world, from the Korean currency, South Korea's currency, from Japan, even Taiwan currency has risen dramatically, the Swiss franc, the euro, the pound, even the Canadian dollar. The Canadian dollar was 68 cents, was going to 65. It's now almost 72 cents. So even that currency has risen against the US dollar, which means, of course, that imports into America are more expensive just on a currency exchange basis, let alone tariffs. Tariffs is a killer. It's going to really hurt this American economy badly, unfortunately. The thing, too, is that bond traders are asking themselves, okay, should I get out of American bonds and go elsewhere? What about treasuries compared to corporates? What if I get out of U.S. Treasury notes, like 3-month notes, 1-year notes, 10-year notes? If I got out of those, where should I go instead? Now, foreigners are always considering getting out of U.S. dollar-backed assets and going to other currency-backed assets. The Europeans who got rid of their U.S. bonds back in April, of just buying euro bonds instead, they're laughing because the interest rate is not much of a difference, but the euro has held its value. The American dollar has dropped, and they're sitting there going, well, we had $50 million of U.S. bonds in March. Since March, those 50 million, they would only be worth $44 million. We went into euros. We could turn around right now and buy back the same bonds we had, and we could buy 55 million in bonds instead of 50 million. That's 5 million more in US. But do we want to buy US bonds directly? Do we want to buy the US treasuries, the government notes, or do we want to buy something known as IG bonds? What the hell is an IG bond? That's known as an investment grade bond. That's a corporate bond. A corporate bond that has a high rating. And what areas of investing would you consider? You'd consider buying tech bonds, Apple, and buying Google bonds, buying Facebook bonds, any of the bonds that these guys have issued for stock buybacks, tech bonds. Utilities, another area of IG, the high-end IG, investor grade corporates would be utilities. And now with the cable company game going on, there's one cable company, Charter, trying to buy city, whatever they're called, city, capital cities, whatever. Cable companies' bonds might be in play as well. The other kind of bond you can play in the corporate bond market is what are known as high yield bonds. You know what those are? Junk bonds. High yield are junk bonds. Cruise lines, they've issued bonds like crazy through COVID, and they're out there still trading away as usual. Once they're issued, they trade on the open bond market. Junk bonds trade at a discount to their par value, generally speaking. And depending on the company we're talking about, they could be at a steep discount. So right now, United Health bonds might be trading at a steep discount to par because United Health has got legal problems with the Justice Department. There might be other areas like mortgage service providers. You might be able to get yourself some nice high yielding interest rates on mortgage providers because the U.S. housing market is kind of stalling here, and with mortgage rates at around 7%, there isn't a ton of buyers coming into the mortgage market, and so there's thoughts, concerns. What about the shopping mall business? Is there a shopping mall near you that's looking pretty bad, looking kind of empty these days? Some shopping malls are closing forever or are being converted into community centers. Some shopping malls in the United States and Canada are becoming more like services malls where there are accountants, doctors, lawyers, dentists, glass suppliers, eye suppliers, these folks who help with your vision, contacts. They're not shopping malls. There's the drugstore in there. Yeah, there's a drugstore because of prescriptions that you have to buy because you saw your doctor, you saw your dentist, you took your kid to this place here, you need to buy medication. Sure, but are there women's clothing stores up and down the aisle with high-end fragrances for sale? No, the shopping malls have lost that allure. And is that where the teenagers hang out? No, they don't hang out in doctors' offices. Teenagers hang out where there's action and, where there's the youth, there's activities to do. These bonds that are backing up these shopping malls are junk bonds because the landlords are getting less rent per square foot from doctors and lawyers and dentists than they used to from jewelry stores and the Apple store or the Best Buy or the accessory stores, women's shoe stores. They pay less rent, these other service providers. So the shopping mall's value is dropping. And so those are junk bonds. Anyway, there's a couple of things about the bond market. Studies are being done right now by investment firms about corporate American companies. Can they survive a tariff of 10 to 20%? If tariffs aren't going to come down, the China tariff stays at 30%, 10 base tariff plus a 20% fentanyl penalty tariff. It's all bullshit. If that's going to stick around with all kinds of countries, can they survive between 10 and 20%? Most American corporations that are large are well funded. Why? They issued bonds. They've issued bonds to raise more cash when interest rates were lower, and they're sitting on big cash piles. They apparently are going to survive the tariff raise, whereas small America corporations, which include mom and pops, are not going to necessarily survive or do very well. And so there's this split between certain kind of businesses with regard to the tariff game. And so the bond players out there and bankers are asking themselves, who do I lend money to and who do I not lend money to? And if I do lend money to this business or this business or this business, what interest should I charge these three different guys? Do I charge this guy 12% interest, this guy 10%, and this guy 6%? Or is it 10, 7, and 5? Who gets what based on what business you're in? And how dependent are you on imports? Very interesting. We are, at the moment, down 66 points on the Dow Jones Industrials. 15 minutes into the session, we're down 62 on the Dow. The S&P is only up 1.9 points, and the Nasdaq is up 30 points. This is not a very bearish market. It is a mixed and looks uglier. We've got the VIX down 40 cents, which is positive, but it's not gangbusters positive. Oil up 27 cents a barrel, 61.89. Gold down $41 an ounce. The Qs are only up 42 cents, 519.60 odd. They're up a little, but the NASDAQ is only up 33 points. So we're going to have to watch this. If this market turns red and the Dow starts losing 150, 250, 300 points, and S&P and NASDAQ drop 0.5% to 1% each, that could take the Qs down almost $5 a piece to the 514 neighborhood. So you want to be careful with put credit spreads, but you also want to give time for the call credit spreads before you make a commitment there. Better to take a smaller credit and be right than to try to get a bigger credit and be wrong. Definitely want to be careful. People ask me, what happens, Bruce, if I write credit spreads on, let's say, the Qs, and they end up in the money? What happens to me? What happens to my position? What are they going to do? These are settled on a cash basis at the end of the day. It's about anyway from 15 minutes to a half an hour after the bell is rung. The final numbers are worked out. And if your contract, let's say on the Qs, if you've written 520 and 525 calls, you've written 520s and bought 525s, and the market, let's say they gave you a dollar in credit. I'm just going to exaggerate it. It's a dollar in credit. Let's say 50 cents in credit, 10%. You got 50 cents in credit. You're risking $450 on that trade, $450 on that trade. That's the most you can lose per position. So if you've done 10 of them, you've put up $5,000 to write 10 $500 positions. You could lose up to, but no more than $4,500. You got paid, you put up $5,000, you got paid $500 back as your credit, you're out $4,500. Now, if the market were to go to 521, all right, it was just under 520, but in the last 10 minutes, the market shot up to 521. Your call option that you wrote would have a $1 book value. The call option you bought, the 525, is worthless. So you've lost $100 on the call you wrote. You were paid, however, $50 per position on the spread, the credit spread. So you collected $500 on those 10. You're down $1,000 on the $1 in the money position. You've lost $500. Your account will close out Friday night and over the weekend on Monday morning. You'll notice you are $500 poorer than you were on Friday afternoon. The 500 credit, you get to keep that, but the 1,000 debit will be taken out, and you lost 500 on the trade. If this contract, the market closes at 522, and the contract is $2 in the money, you're down $2 a contract, $2,000 on 10, but the 500 credit is still yours. You've lost $1,500. If the contract died at a 519.99, 1 penny under 520, your two contracts expired worthless. You keep all $500. And of course, if the market closes at 518, $2 below the 520 mark, where you wrote your call, you're still keeping the $500. Your contracts are worthless. The strategy to write a call credit spread is to write a contract, buy a contract that are both going to die for nothing. That's the strategy. And you want to be careful and be diligent when you do write that call credit spread. You want to be looking at this market going, well, if it's at 519.95, I'm not going to write 520 and 525s. That's too damn close to the fire. You might be writing 525s to 530s. You might be writing 527s to 532s. It depends on the credit you can get on these contracts with, say, 2-3 hours to go in the session, 4 hours to go in the session. You want to be comfortably out of the campfire. And so even if the market does roll up a little bit, you're still out of the money on expiry. Now, if you've got a call credit spread on the go, you're out of the money, $5, and we have 2 hours left in the day, you may find now that you're comfortable writing a put credit spread as well. $5 put credit spread behind the market, perhaps $5 or $7 or $8 away from the market as well. You'll get a credit for that one, and you'll add that to your credit overall. On the other hand, you may find that as the day rolls on, things are not working out. The market is gaining on your 525 contract, and the market runs to 523, 524, and you're getting a little bit nervous about things. You are going to now do something else, possibly. You might create a put credit spread behind the market. You might do a put credit spread in this 515, 520 range with the market now at 524, and you'll take a credit for that. But at the same time, you'll take that credit and you'll add it to your overall credit now to roll your 520.25, 525 to 520.25 or 525, 530. You might take that put contract or call contract and roll it up a couple of bucks and go 528, 533, or 529, 534, or 530, 535. You may move the call option forward a few dollars from the credit you received from the put contract that you've now written, all expiring today, so that at the end of it all, the market is at 524, used to be at 519, it's now 524, and you're sitting on 515 to 520 puts, and you're sitting on 525, 530 calls. All four die worthless. You keep all the credits, and that's the end of the day. If the market drops into the money or goes up into the money, then you will lose money on the call you've written or the put you've written, less the credit you got. And so if it's a 50 cent in the money situation and you received a 70-cent credit when it's all said and done, you've made 20 cents. Even though you lost on the trade, you still made 20 cents, 20 bucks per position. If you've done 10 of each, you made 200 bucks. That's something to think about. Now, if you need to do a rollover, market has gone up on you, there's still 5 hours to go in the day, 4 hours left to go in the day, 3 hours left to go in the day, you might not be able to do a rollover for today's expiry that pays you enough or makes it worth your while. You might not be able to create a put credit spread right now that dies today that will compensate you enough for a rollover you need to do. Now what are you going to do? Well, instead of sitting on today's expiry, you're going to now write a Monday, Tuesday, Wednesday, Thursday, Friday next week expiry. You're going to go forward in time. And you're going to say to this market, all right, I'm extending the clock on this trade. I'm going to write a contract that dies next week, Friday. I don't intend to wait until next Friday to close this thing off, but I'm going to write a Friday contract right now, a call credit spread. You might say, I'm going to write the exact same contracts. I've got 520.25s and the market is 521. I'm writing 520, 525s for next Friday. In the money, the spread is in the money right now. But you will be paid a credit that includes the fact that you're an in-the-money writer, because you're gambling that the market will back off between now and then, or how much you can get in premium right now in a credit spread is so juicy that even if the market stays at 521, you win. And you're happy to do that trade. In other words, you buy back your call credit spread that you have now that dies today. You will then roll into next week, Friday, same credit spread positions. And then what you'll do is add a put spread behind it. Again, out of the money now. And now you've got an out of the money put spread and slightly in the money credit spread on calls with a big credit in your account to have compensated you for this roll up and roll forward. Come Monday, Tuesday, market gives up a couple of points. Goes from 521 to 519. Where we are right now. Your Friday calls are out of the money now. Now, they might slip a little bit in value, and your puts have slipped a little or gained a little bit in value because the market has backed off a bit, but all four are out of the money. You might be comfortable on Monday or Tuesday to do nothing. You might be going, I don't have to do anything here. I'm going to let this ride. But you're watching the spreads. You're watching your credit spread. What did you get for that credit spread ultimately, and what is it at now? By Wednesday afternoon, if the stock market is 517 to 522, somewhere in that range, you may find that the time value in all four contracts has really shrunk out. And now we're really only talking about value on the in-the-money call or an in-the-money put, if there is anything in the money. And you may do a rollover on one or both of those, an adjustment, and or you may find that, you know what, even $1 in the money on my puts or my calls, with the credit I've received and with the lack of time premium left, this trade pays me to shut it down. I can make money on this trade, even though we're $1 in the money, which is where we were when I did the rollover. That is what an active trader does. This is what you do all the time. You're constantly adjusting your portfolio, constantly adjusting your calls and puts. If you're going to do this as a living, you cannot play the game where I'm going to play short-term contracts, but I'm only going to do it on a casual basis. No, that's not, you can't do that. You want to play hockey with professional hockey players? You get on the ice, you get ready to be hit by anybody at any time, because that's how the game is played. This game of short-term 0-day to expiry contracts, or 2-day to expiry, or 3-day or 5-day, you've got to be willing to get some contact made here. And you better be careful about how you do what you do. And you better be very comfortable being a rollover specialist, because that's what's ultimately going to happen anyway. You're going to roll out of one day's contracts and into something else, maybe the next day. Maybe tomorrow afternoon will be your next right, Monday afternoon. Maybe Tuesday afternoon will be your next one. But sooner or later, you're going to roll into something else. But other times, you have to roll midday. And that's just the way this game works. We'll make it work for you. That's the name of the game here. Thank you all so much for joining me. I'm trying to give you as much info as I can with as little time as I have on how to do this business. Giddy up. Jeff Glass says, after this big run-up I've had on the shares I hold and have bought back most of my cash secured puts, I now have all my shares covered except for my SoFi. I'm good if things back off a bit. I can write cash secured puts, okay? Let's see. Spire's talking about all kinds of other stuff here. Said estate, SMCI signed a new agreement. Will it hit $50? I don't know, my friend. It's a volatile stock. Govern yourself accordingly. 47.10 up 315. It's having a great week, a great day again today, of course. The Dow right now is up 22 points. We've recovered the losses. S&P's up 10, Nasdaq up 44. And imported good costs apparently are showing signs of tariff-related price pressures. That's a headline that just came out in the last couple of minutes. So we'll watch for see if that has any effect on the market. Continuing forward, this is news we're going to get lots more of in the next few weeks. We are going to be inundated with news about tariff price increases. The Qs are at 520, up 77 cents at the moment. Okay. SoFi is up 21 cents at 13.78, coming back a little bit. GameStop is up 4 cents. ASCS up 149. Rocket Lab up 40. MSTR down 449. AI up 20. Supermicro up 301. NVIDIA up 76 cents. Tesla's up 446. We've got the Spiders up 81 cents. The Q's up 75. Palantir up $1.25. Costco up 6.96. Coinbase holding a gain of 14.64 even after all that bad news the other day. Google up 3.60, Apple up 15 cents, Broadcom down 4.20, Microsoft down 3.34 today, Intel up 7 cents, Netflix up 13.91, Meta down 5.91. This has really backed off about what $20+ now in 2 days for any of you out there with call credit spreads on Meta. You got to be smiling out there. Any of you who did rollovers on your Meta, are you happy campers? I would think so. EI Lilly up $19. Amazon up 54 cents. Uber up 61 cents. Adobe is up 15 bucks a share. Cisco up 47 cents. AMD up 206 to 117.04. For those of you playing AMD and you were into cash secured puts, those puts now have been crapping out wonderfully. I'm hoping that some of you are in a win position here finally. You know who I'm talking to. Unity up 34 cents. Enphase up 89. Moderna up 97 cents. Pfizer's up 7. IBM down 29 cents. For any of you who've been watching IBM and are watching those credit spreads, wondering if they're going to come off, maybe we've topped out on IBM here. maybe that's the beginning of the pullback on this. HPQ up 31 cents. Home Depot up 2. Advanced Semiconductors up down 141. Goldman is up 27. Boeing is down 250. Target is up 124. JP Morgan down 160. Walmart up 120. Disney down 56. American Airlines up a nickel. DraftKings down 14 cents. Jeez, AMC unchanged and Royal Caribbean up 126. Talk about a mixed bag. This market has not got a full-blown green arrow to it or a full-blown red arrow to it. It is wishy-washy at best. Welcome to option expiry day. I don't think we're going anywhere. I don't think we're going to have a real run today. I just don't believe it. I think we're going to be deteriorating as the day goes on. That's my gut telling me this. We're up now 6 points on the Dow, 3 on S&P. We're only up 23 on the NASDAQ. So, yeah, the triple Qs got up to that 520. What did they get to 521? 520.72 maybe. They're now 519.49. So the Qs are coming back to the break-even level. I wonder if we're going to go red on this. Anyway, welcome all to the program. Great to have you. Let's see. Susan Shops, Bruce, what is your experience aerospace defense stocks if they go to a recession? Past recessions talk if these stocks do well. Well, okay, other stocks tank or whatever. Well, okay. At the end of the day, it's a matter of whatever defense contractor you love or you're following. Are they making money or are they not making money? Are they going to make as much money as last year or more than last year? And what are their advance orders? I don't, how do I say this? I would not encourage you all to shift everything you're about to go into defensive stocks just because the market might go into a dip because we're going into a recession or we're in a recession and this is the greatest growth sector of the economy. This channel here talks to you about writing options. And if you like defense stocks and they have excellent option activity, then take a look at credit spreads there, cash secured puts there. But if there is not good option activity, not good liquidity, not heavy volume, then I would avoid this. I would stay where the options are the heaviest, where the easy money is the easiest to take off the table. Because for some of you here, you're going to get into the point where you're going to write 50 contracts at a time. You might do 50 credit spreads, calls or puts or both. And all you need is a 20 cent move. A 30-cent move is all you need. You're not going to get a 30-cent guaranteed payoff if you're dealing with contracts that have a 50-cent spread. If the bid is $1.10 and the ask is $1.60 on a call, and the puts have a 50-cent spread, you can't make money in the credit spread business here. You don't have liquidity. There aren't any buyers or sellers willing to go at market value. But if you're into the triple Qs, SPXs, maybe you're into Teslas, maybe you're into NVIDIA, you're into contracts where the spread is a penny, 2 pennies, and there's lots wanted, lots offered, lots trading all day long, a lot of activity, lots of liquidity. That is where you can take 10 cent, 15 cent, 18 cent, 23 cent, 29 cent credits. This is where you can write a call credit spread and bring in 28 cents and buy it back at 13 cents with complete confidence. Instantly, immediately filled. That's what you want to do if you're going to do this kind of business. Henry T. Danny Boy is not done with tariffs for 150 countries. Uncle B. Susan, Rocket Lab is considered aerospace defense sector. Thought its countries are buying to build up defenses. Susan, I would keep writing on my Rocket Lab. Yeah, of course. Zed, Netflix 52-week high. Bruce Splair, thanks. That's info I'm here for with the spread of 5 cents, 50 cents a video. Listen before relocate. Private playlist. There you go. Look, thank you, everybody. Yeah. Look, you gotta keep. I'll remind you of the fact that if you're going to be an active option writer, whether you're a cash secured put writer, you write a cash secured put for $4.50 to buy it back at $3.50, or you're going to be a deep in the money call writer and you're writing calls for 445 to buy back at 345. You're a fairly active covered call writer in your retirement account. You love writing covered calls on your 1,000 shares of whatever, and you love taking $2 off the table every month on a stock. You write a contract for 450 and buy it at 250 to write another contract at 450. You love this game. Great. You're going to need liquidity. You're going to need the contract you're getting into and the company you're following has liquidity. If you're going to do credit spreads on the index options or eventually on 0 day to expiry contracts on the Magnificent Seven, it's coming. And others, you better be able to handle this kind of business and look for liquidity to give it to you. Maybe the Google 0 day to expiry contracts aren't liquid enough to let you do 20 at a time. Maybe you can only do 20 at a time on Apple daily expiry contracts. Maybe only NVIDIA gives you the ability to do 50 contracts at a time because of the 1 or 2 penny spread. And certainly the SPX, SPY, triple Qs, and others with daily 0 day to expiry contracts should be liquid enough to let you make money. You have to have the ability to get in and out on dramatic movements of the market. You've got to be able to react. The Dow, by the way, down 1.8 points. We've gone red again after gaining a few points. The S&P up 6, NASDAQ up 31. We'll see how this plays out. Welcome to the party, pal. Auntie Jen is in the house. It's option expiry day. It's the third Friday of the month.
Oh, it is?
Yeah, yeah. $3.7 trillion of contracts. Jen is going, is it really third Friday of the month? Oh, my God. The 16th, third Friday of the month.
Yeah, it's early.
Yeah, that's right. So how about them apples? What can I say? Welcome to the party,
Any
everybody.
exciting things going on?
Lots happening, but
Lots green, lots red, but not very much.
it's a mixed bag. It's a very mixed bag today. But I am warning people about the fact that over at least 80%, maybe even over 90% of all contracts that are expiring today are calls.
Right.
It's skewed to the call side big time because of the run-up since Independence Day or Liberation Day, or whatever that was called. But that bull run is over. And we may be watching here today the deterioration of these markets as the day wears on and all these contracts get rolled out. This has been happening now since we opened. You may find that the Dow hits lower highs, lower lows, lower high, lower low, lower high, lower low as the day wears out.
And what do we call that? A bear market.
Well, we call that a sell-off, yes. Not necessarily a bear market, but for the day, we may end up down 250 points on the Dow. We might be down $5 on the Qs. We might be off $3, $4 on the SPYs. Those of you with daily expiry options and thinking, I might write call credit spreads, I say wait an hour or two until you do so and make sure this is confirmed. Because it looks to me like this could be the pattern, but we've only been here for 39 minutes. It's not even near an hour yet, so we're going to need to know, is this deterioration going to continue?
And no one's watching. They're all watching Eurovision. So.
Well, there's that too, I suppose. I don't know. We're down a point on the Dow. We're up 10 on the Dow. We're not going anywhere. S&P up 5, NASDAQ up 27. So that's the story. We're sticking to it. Giddy up.
Want your bagel now?
I would love to have my bagel now. Indeed, I would love to have my bagel now. Thank you all for joining us today from wherever you are on the planet. I just want you guys to get richer writing options. I don't care what direction you make it in. I just want you to be careful doing it, be conservative doing it. That's your job. That is your mission. You're here for the long haul, not for one trade only. You're here for the rest of your life. Giddy up, everybody. Susan Shop says, please do a class on these darn 0 day to expiry contracts. I'll be the first to buy when you announce it. Bear with me. We get back to Cowtown at the end of the month. We'll get back to the whiteboard behind me, and then we'll set it up. So I'll give you plenty of warning, and we'll set it up. Richard Carlin, good morning, Auntie Jen. Dude, good morning, Auntie Jen. Splair, for real, good morning, Auntie Jen. I'm surprised too about the third Friday today. Dude, I rolled all my monthly calls and I brought them in. I'm not mad about it. They shrunk in half, so there you go. Jay Gill, good morning, Auntie Jen. Jay Gill, bagel now. There you go. Giddy up. SoFi's up 12 cents at 13.69. GameStop down 7 cents. ASTS up $1.04. Rocket Lab up 37 cents. If you take a look at a Rocket Lab chart for the last month, 3 months, 6 months, you'll notice a significant recovery from the $30 range that we were at. It got down to that, $17 range, 16, and now it's back to $25.50. Coming on. Rocket Lab wants to go back to 30. ASTS 27.40, nice move here lately. At GameStop 28.59. Take a look at a 3-month chart on GameStop. These are the highest levels in quite some time. Quite nice. Quietly going higher is what GameStop is doing. Remember, your friend Ryan Cohen bought a whack of stock personally, $21.55. Do you remember that? $21.55. He's up $7 on his stock purchase that he made last. $28.50 right here, not bad. MSTR down 661. AI is down just 2 cents. A super microcomputer, SMCI up 292. NVIDIA up 72 now. Tesla's up 150. The spiders are up 11 cents, and the Qs are negative a dime. They're going into the red here. We could be the beginning of a bit of a pullback. I'm kind of wondering about that. We're down 18 cents on the Qs. Down 4 on SPY now. U.S. consumer sentiment slips for the 5th straight month. Inflation worries are growing. That is a headline that is breaking out there. The Dow's down 9 points. It'll be interesting to see just how this goes. This is just coming out a few minutes ago. We'll see about how that affects the entire markets. Bitcoin, by the way, up $500 a coin, 103,667, $103,677 at the moment. There you go. Welcome all to the party, everybody. It's great to have you here. Thank you for joining us today. Like I say, it's a mixed market, but I think we're trending lower as the day goes on. That's what I suspect is going to happen here. All righty, welcome everybody. Bobby Atkinson, Rocket Lab back to 30. That would be perfect. My $530 Rocket Lab cash secured puts at $10 each. Give me all of it. Susan Shops, are you thinking we might want to buy back our cash secured puts to be in cash? I know you can't predict yet. Honestly, you're pretty good at assessing things. No, I wouldn't be doing that because I'm looking at a number of different stories simultaneously. The one constant here is SoFi, GameStop, ASTS, Rocket Lab, AI are winners. They're growing and growing and growing. The tariff thing is a sideshow for these guys, okay? The big picture, for those of you writing contracts on the Qs and the SPYs and SPXs, that's where you got to keep an eye on the whole market. And again, if you are long Apple shares, you're long NVIDIA now at 135.60. Today would be a great day to sell NVIDIA at 135.60 and turn around and write 125 cash secured puts. Great day for that. You keep $10 off the table. You get the premium, say to January, which could be, I don't know, $12, $15. You just took in $25 a share in cash. That is an excellent move on NVIDIA. I would rather you were into cash secured puts on NVIDIA than own NVIDIA. But hey, not everyone has that kind of capital. Same with Tesla. Sell at $343 now and write $300 cash secured puts. I mean, hey, out of the money, take a big fat premium on them. Why not? Even 320s. Go out in time and take gazillions of dollars off of this table. Absolutely. Tesla down to $300 a share, 2 days. That's all it would take. NVIDIA down to 120, 2 days. Like even 1 day, it could go down 15 in 1 day. You know that. I know that. Yeah, I'd be selling here and writing cash secured puts on these big ticket stocks. Absolutely. I would definitely be doing that. Just a guy in front of the computer here. Look, on Rocket Lab, it's 25.60. If you got 1,000 shares, you could sell them right now and write $22 cash secured puts and bring in tons of money on these. ASTS, sell at 27 and write 25s, 24s. GameStop, sell at 28.50 and write 25s. Cash secured puts. Thank you very much. There you go. Sure, you can sell SoFi 13.67 and write $13 cash secured puts, or 14s or 12s till January 26th. You could do that if you want. Yeah, up to you. Number 132, by the way. Zed, SMCI 47.11. Come on, baby, let's go to 50. There you go. Zed, just cheer it for it to go to 49.99. Just cheer that. That's more than enough. You'll be fine. Giddy up. Hope you're all making money out there today, folks. Welcome to the Party Pals. Thank you for joining us. Consumer sentiment slips for 5 months in a row. Why do you think this market's going to hit all-time highs? Where do they come from? Analyst yesterday was saying that Microsoft is going to go up another 20% from here. That's $80 a share more, higher to $500 a share. Are you kidding me? They just laid off 6,800 people. They're dumping staff all over the place. They did a bunch of layoffs 6 months ago. They were doing another bunch now. They're shrinking their company out. They already know. Their product is not selling very well overseas right now. The tariffs are killing them. Don't know where these analysts, I just don't understand how they, well, I do understand actually. I don't understand how they can live with themselves knowing that they are recommending stock that really doesn't have a serious chance of hitting these kinds of numbers. Any investor out there foolish enough to just blindly follow these guys, I really feel for them. But you know what it is? It's other money managers who are following these guys. The people that you've hired or your employer has hired to manage your money, these are the guys buying Microsoft now, expecting it to go to $510, $520 a share. These are the morons that are managing your money with all of your friends and coworkers. We're at 451. They're thinking it's going to go to $540. It's not going to happen. I don't think so. I think the odds of Microsoft going to $400 a share are far greater than going to $550 a share. I think so. I'm just a guy in front of a computer. What do I know? I'm just old. Welcome all to the program. How you doing out there? Let's take a look at the poll question of the day. 218 now. People have answered the question of the day. 218. This is great. 135 thumbs ups have trickled in. Keep them coming if you can. My income from writing options now beats my salary. That is the question. All right. 1 in 5 say yes. Uncle Bruce, we are the 20%ers. We are already generating more money from option premium than we make all year. That translates to almost 42 people, almost 42 of you guys. That is significant. 6 months ago, this would have been half as good. A year ago, 8% of you might have said this. 20% say, I make more money writing options than I do at work. This is cool. The other 80%ers, I am sure you are a percentage and higher of that numbers. I bet you that half of you are over half already coming into the final half of that equation. You're going to find, and you probably have found some of you, the longer you've been here and the more you keep writing contracts, what you're finding is that in the last month, you made more money in option premiums than you did 3 months ago. And in the last 3 months combined, you made more money than 6 months combined a year ago. In the last, so far this year, the amount of money you've generated in option premium pales in comparison to the first 5 months you ever wrote options. And you're now in a whole different world of performance. Thank you, Jen. Here is the bagel for Friday. The
Hello,
great
everybody.
jelly bagel. Thank you, Auntie Jen. Yeah, I bet you there are folks here who are saying, Uncle Bruce, man, I'm bringing in dough here that can't compare to what I did originally or what I did after 3 months. In the last 2 months alone, I made more than I did the first year that I wrote options. This is really compounding, and that is what I'm excited about for you guys. I can't be more stoked. Here is a grape jelly bagel toasted on a sesame seed bagel. Sesame seeds on this side, anyway. Welcome all to the party. Thank you for joining me. Headline just came out. Fintech stocks are hot again as Coinbase and eToro whet investor appetites. SoFi is the fintech stock of fintech stocks, in my opinion. It is the company in fintech. But that's my opinion. What's yours? We'll see. Hello, everybody. Zeta State. The SMCI, Bruce. 47.50 now. We'll giddy up, SMCI. All right. Henry, my GameStop cash secured puts, these 25s that expire October, I wrote them March the 27th. I'm now up 40%. What do you think if I'm rolling this, Uncle B? You could roll those to January 26th. You could go to, you can go from October to January, and you could write maybe 26s or 25s and probably get several dollars more. Up to you. Menu number 5. Hello, Antigen. There you go. Juan. Bagel, 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 bagel. Walter, good morning. Antigen from Walter. I wish you all a good weekend in advance. If you're going to have a good weekend, I want you to have a good one. Hope weather is agreeing with you wherever you are. Delicious. Just delicious. First food of the day. Fantastic. Henry T, thumbs ups, Bruce. Thank you, everybody, for these thumbs ups. Keep them coming in. If you can hit that thumbs up button for me. Find it, nail it, get us closer to 200 thumbs ups. If you're watching on the rerun, help us out. 137 thumbs ups. 218 people have answered the poll question of the day. This in itself is something to consider. 218 people are option writers answering that question. I mean, if you're not an option writer, you're not going to answer the question. You don't do it. You don't do options, but 218 option writers are answering that question. I am humbled because a year ago it would have been 150 of you. And 3 years ago it would have been 75 of you. We're now capturing just in the first, hour and something of the show, that many responders who are option writers. This channel is drowning in option writers, covered in option writers. Zed Estate, go SMCI, go to $49.99. There you go, Zed. You're doing it right. You're doing it right. 47.14 on its way to $49.99. Giddy up, everybody. Well, it looks like SoFi's gone up a bit. 13.76. Looks like it's moved up 5 cents. Last couple of minutes. That little headline is not hurting the stock at all. Only 9.2 million traded on SoFi today. Kind of a calm day, but it's moving up 19 cents at the moment. GameStop's down 2 cents. 28.61. It's looking good. Oh, yeah. Dude, basically, with the writes that I've done, I brought in 3 extra paychecks this month. Not bad. Not bad at all. It starts getting interesting when you start writing contracts and you go, oh, I just wrote these 10 contracts and brought in $4,500. And you're going, $4,500. Wow, that's more than I get in a paycheck. This is nice. Zeta State, SoFi to $20, NVIDIA 200. Who gets there first? Who thinks? What do you think? Who's going to go where? We'll find out. It's funny how quickly you'll get used to, on a monthly basis, no, oh, I'm running options in the next 2 weeks. That should bring in about 10 grand. You just kind of get, it becomes passe. Oh yeah, I'll bring in 10 grand in the next couple of weeks. These are dying. These have faded out. I'm rolling these into these. I'm going to roll those into those. In the next 2 weeks, I'll have it all done. And there'll be 10 grand more in my account. My retirement account is surging in value compared to what it used to do when I let it be managed by professionals. Yeah, okay. Giddy up, kids. Welcome to the party, pals. $142 thumbs ups. They're coming in. Here they come. 220 people answering the poll question of the day. Thank you all for the participation today. Great to have you do it. A special shout out from me to those of you who very privately, very calmly make a donation to Jen and I through the PayPal link. We don't always acknowledge that every single day, because sometimes these donations come in at like midnight, depending on what time it is where you are. There are folks out there who will send us a quick little note saying, "You've changed our life. We just scored this wonderful game. Thank you. Go to Costco, pick something up. This will help with your budget." We thank any and all of you who have done these PayPal donations, because if you do a donation here on the super chat, here 30% goes to YouTube, and we get 70% of those donations, and I don't get them until the 21st of the next month. So it's a kind of a delayed reaction, but we appreciate it. I mean, someone making a $50 super chat donation, that's $35 to us. Thank you. However, those of you who are doing a $50 donation on PayPal, or 100 or 20 or 10 or 18 or 35, whatever, 96% of that comes to us. There's a small percentage going to PayPal to handle it, but we get the vast majority of it. And so, yeah, when we tally up donations, so we go, oh, well, we got $100 in donations for from YouTube versus $100 in donations on PayPal. It's $70 from YouTube, and it's 96-ish from PayPal. It's quite substantial. And so, again, those of you who've been just for years been making these donations, going, just scored a real nice return on these contracts we wrote last month or last quarter or this week. Just want to let you know, we don't comment very often on the air, but thank you. I thank all of you. Left, right, so Jen and I, we're always mentioning this between us, but some of you would like to not be promoted on the air like that, and we respect that. That's why PayPal is more, it's much more subtle. Thank you all. Thank you all. Okay. Let's see here. Susan Shops. I've reviewed my account since January and I have done well. I write cash secured puts expiring January expiry, and I bought back 15, 20, 25% because folks excited waiting spider year-end returns of 20% for the year. If I had folded my arms on my returns, it would have been 2 times. Susan says, anytime you can earn 15 to 20% of your money in a year. That's awesome. And here with Bruce, we can do it in a month or so. Many thanks to Bruce and Jen for all the sharing and caring of this channel. Right on, Susan Shops. I just love it when you make money. The $13 SoFi Jan 26 cash secured puts, they're paying $199. If I sell 5 contracts, I get $995, and I still have 500 SoFi shares. My cost is $706. With that $995, I can buy more $13 SoFi or Rocket Lab. Yeah, that's right. You could. Zed. SMCI is $47.57 on its way to $49.99. Then he says $47.77 on its way to $49.99. Right on. Hey, thanks, Uncle Bruce, for writing me back yesterday. I really did well on those call credit spreads on the Qs. I picked up $400 for the day. I couldn't believe it. I made $400 yesterday. There you go, Walter. Thank you, Susan Shops, for your input. We love it. Thank you all for letting us know.
Can tell them what to do with that 400.
Oh, Susan Shops can tell them what to do with that 400. No problem.
No problem.
You need advice. Who else can give them advice? Who was it? I was thinking of somebody else, one of my other viewers, the one who gave us those coffee cups.
Lorraine.
Lorraine can give you advice on what to do with $400.
That's right.
I think everybody here can give you advice what to do with the 400.
They're stuck.
I say compound it. Baby. Yeah, man. Oh, my. Thank you all for letting us know how you're doing. It's great. Barron's headline, Super Microcomputers having a great week. The stock's rising. Rock and roll. Super Micro, 47.15, up 319 on the day so far. The Dow is ahead 17 points. That's all it can muster right now. 5/100ths of a percentage point. These options, most are calls. They all expire today. I don't think we're going to see upward pressure. I don't believe it. But it'll all work out. The Qs are down 19 cents. The spiders are up 16. So we're not going anywhere here. It's not like the NASDAQ is taking off and the Dow isn't. No one's going anywhere. There you have it. Time to eat the sesame seed half of this bagel. Oh, yeah. Susan Shop says, I got to get better at folding my arms. I would have doubled by waiting just 6 weeks from March to now. Bobby, I'm so happy with SMCI. I wrote two $40 cash secured puts at $12 each. This is months ago when it was $40. Now it's coming on. They are bidding at 9 now. They're coming down. You betcha they're coming down. The stock going higher. It gets through 50. Let's go to 52. Those are going to be at 6, maybe less. Giddy up. Where else can you get paid to fold your arms for a living? I mean, really, what other job lets you do that? It's pretty good. Giddy up, everybody. GameStop down 2 cents. That's it. Susan Shops. Ooh, I'm loving SMCI. I wrote August and January $38 cash secured puts. There you go. Cindy, I have to fold my arms longer also. The premiums come in the closer you come to expiry. And that's when the payoffs come my way. There you go, Cindy. Right on. Giddy up, folks. Qs are off 50 cents. NASDAQ is going red, down 4.7 points now. We're down 63 on the Qs. Apparently, Bill Ackman with Pershing Square is taking in a stake in Uber. He's buying into Uber. Down 75 on the Qs right now, 75 cents. The Dow's down, S&P is flat, NASDAQ down 11.5. Bobby, I'm all in BIL ETFs right now, daily interest. I'm now producing $440 a month in interest. Arms are folding, face is smiling. That's a nice little side gig you got going there. Bringing in all that interest from all these players' money, using other people's money to make money. You gotta love this. Congratulations, sir, Bobby. How are you doing out there with your interest? Are you folks, some of you folks bringing in more than that? You bringing in more than $440 a month in interest? How's it going, kid? Susan Shops says to Cindy, Bruce taught me to write January, then look at June contracts. You can buy back the June's 50%, just time decay and do absolutely nothing. You can write them. Yeah. Mandu, great work, Bobby. $440 a month in interest. That's pretty good. Jeff Glass bought back the $22 Jan 26 cash secured puts I wrote 2 weeks ago at a 26% profit. I only have my Jan 2630 cash secured puts left out there. Are those on GameStop? I'm not sure what that's on, but he's winning. Down 79 cents on Qs. Okay. Nice. Really nice. Maybe I'll pull it back a bit and save my June 6 $25 calls. Mark, interest so far this month, $1,252.37, with one more dividend coming in next week for another $280. Mark C, getting paid money to sit on money. Oh, that's nice. Very nice, Mark. Jeff Glass. Sorry, Rocket Lab, Bruce. It's on Rocket Lab. Okay, got it. Giddy up. Susan Shops, a good thing buying back is it frees up lots of collateral cash to be ready for the next red day. That's right. The little things that option writers learn and have working for them as the market is crying the blues, option writers are giggling. They're just giggling. They're casino owners taking money from the saps. Oh, yeah. Nice job, everybody. You keep up the good work. I have finished my bagel, and it was terrific. Thank you, Auntie Jen, again. Another Friday bagel. Oh, my goodness. One way I know that time is passing by is when Jen looks at me and says, we have to go to Whole Foods. We need to get some more bagels. Then I know, oh, wow, time is going by. Wow, no kidding. Every day. Down go the bagel counts. Giddy up. I like this game. Do you like this game? I like this game. Welcome all. Jeff Glass says, yes, Susan Shops. I have a pile of free cash now. I can make moves. And with cash lying around, you can earn interest on it a couple of days at a time, a week at a time, however you want to play this game. There are viewers here who are sitting on hundreds of thousands of dollars of cash from writing cash secured puts, and they're bringing in thousands of dollars in interest. Absolutely. Collectively, this channel, there's millions of dollars in people's accounts in this channel, bringing in a lot of money in interest, courtesy of the U.S. government through treasuries, courtesy of the bond markets, the capital bond markets. Yeah, baby. Being paid to hold cash, not a bad game to play. Banks are good at this. Since the 1500s, 1400s, they're pretty good at this. They have some pretty big skyscrapers in every city in the world. Juan, Uncle Bruce, what would be the side effects to BIL if Powell starts cutting rates? Well, you can always move into corporates. You can always do an ETF search for the best ETFs with corporate daily interest corporate bond ETFs. You'll find a bunch of those. You might find that collecting interest from cruise lines and hotel chains and airlines and auto part manufacturing companies and real estate developers might be your cup of tea. Maybe the 7 or 8% interest you can get from those guys attracts you more than the 4% from the feds or less. We'll see, but I don't see interest rates being cut for a while. Susan, I write cash secured puts on GameStop and also cover calls on GameStop. I have no idea what it will do. I feel like I'm running a little hedge fund in my kitchen, I could not be doing this without finding Bruce and all of you guys. I got this little hedge fund, the kitchen hedge fund going here with Susan Shop. Henry T. just rolled my cash secured put Rocket Lab, my 21s from for June to July. From July to September, for 225. I gained 30% in 3 days on this move. Nice job, Henry T. More capital in your hands, more interest on your money. Put it to work and get paid to do this. This is a beautiful job. Keep this up. Yeah. When your SoFi reaches 18 to 20, a whole bunch of you around here are going to shift your 12, 14, 15, and $17 cash secured puts up to the 22, 25 neighborhood. And gazillions of you guys are going to be bringing in gazillions of dollars on these roll-ups. Once the shares break the 20 level and go to 22, 24, 25, all the $20 puts will be rolled up to $25 to $30. And that will bring in millions of additional dollars into all of your collective hands. And the daily interest take will rise dramatically again through the viewers of this channel. It's just the way it is. It's the way it's going to be. You're going to get richer, whether you like it or not. Welcome all to the program, and thank you for being part of this show this day and this week. Congratulations to those of you who have stepped up to grab classes and learn how to write options, become part of this family. Congratulations if you're relatively new and you've been referred here by a friend, a relative, a former coworker. You're a newbie, and you're listening and watching with great interest. You're looking at these trades going, are these real? Is this really being done by people? You can replicate the trades that these people say they're doing for nothing. You can do it for free by just opening up a brokerage account with any of these online brokerage firms, and you open up a practice account. And you can do practice trading on these exact positions. People have been doing this around here for months, and they sit back and they go, I am not interested anymore, Uncle Bruce, in watching these trades anymore, because I've done 15, 20 of these practice trades, and every one of them is paying off. And I'm doing the math going, well, I've got $20,000. I could have done 5 of those and 8 of those and 3 of those. And they pull out their pen and paper and they go, I would have made $150 on that trade. I would have made 320 on that trade. I would have made 140 on that trade. I made 600 on that trade. They add it all up and they're going, I would have made $2,800 in the last month. And his classes are $200 each. What? I can earn while I learn to do this. And then I can just do these trades along with these folks. I can just I see so-and-so doing that cash secured put. I'm going to write that cash secured put, but I'll do it in my comfort zone. You did 10 of those. I'm going to do 5. I'm going to do 3. Whatever works for you. Welcome to the party, pal. Come on in and enjoy the family. If you want to be part of the Discord chat group, become a Gold Bagel member of this channel. Send me an email link and say, Uncle Bruce, I'm a Gold Bagel member. This is my handle. I would like to be part of the Discord chat group. I will then send you a link, send you link info so you can become part of the chat group over there as well. And then you're hanging out with the Gold Bagel members. I'm not there. You're not going to find me in the Discord group. I don't do that. That's your little home. That's your living room. You guys chat amongst yourselves. Talk about me if you want, or talk about the channel, or compare notes, and go from there. Welcome to the family of option writers. Thank you again for joining us this whole week. Jen and I cannot thank you enough for everything you do for us. We love you. Dak, is it worth rolling 90% profit, poor man, PCS, put credit spread to get extra credit? Uncle Bruce, is it worth rolling 90% profit, put credit spread to get extra credit?
It's always worth taking 90% profit.
Yeah, I don't even know why you're asking me this question. You got to be making a roll, but hey,
90% profit.
you shut that thing down and take the rest of the day off. You're forgiven. Jeff, all my shares seem to be heading down at the moment, but I've written calls on them. I like this game. This is okay. Mandu number 5. Neat. The knee emojis keep coming in. The Dow is down 7-8 points. S&P down 3. NASDAQ now down 48. So the Qs are off $1.49 now. 517.75. So this could be the beginning of a downdraft for the rest of the session. We've gone through the first hour and 17 minutes now. Keep an eye on it. Within the next half an hour to an hour, you might be taking call credit spread positions that expire today. Make sure to be well out of the market. The high today on the Qs, 520.72. We're at 517.93. You want to be well over 520 today. And if you can't get a decent credit, take the day off. Don't worry about it. But if you can get one, great. Knock yourself out. Keep an eye on the spreads and keep us posted on how you're doing. Thank you one and all for everything this week. And again, one quick review here of our thumbs up meter and our question of the day. Here we go. We have 148 thumbs ups. Thank you, everybody, for that. If you can hit the thumbs up button for us and get us closer to 200, I would appreciate it. Those of you on the rerun, please help us out there. On the question of the day, we have 233 people answering the question of the day. My income from writing options now beats my salary. Now, this could be on a daily basis, or a weekly basis, a monthly basis, or an annual basis. And it could be through your retirement accounts, your margin account, everything combined. How are you doing? 19%, which is about 44 people, are saying I am matching or beating my salary numbers. That is pretty cool stuff. 81% are working on it. It's coming along. Well done, everybody. Keep up the great work. Please get richer. And thank you all so very much for joining me. I look forward to seeing you on Monday morning for more fun, and see if we get you guys get richer than you are now. Keep up the great work. Thank you. Thank you, Splair. Thank you, Boeing Tiger, James, Dude, the Big E. Got a zit at the end of those ones. Howdy, partner. Thank you. Juan, Susan Shops, number 148. Christina, have a good day, everybody. I have only been lurking today. Charlie, thanks, Uncle Bruce. Have a great long weekend, my fellow Canadians. Neat. That's it, kids. Have a great time. Jen and I are going to say our goodbyes in 3, 2, 1. Bye. Andrea, that's a good idea.